Welcome, everybody. Joe Tarnowski with ECRM here, and I have with me back again Stephen Baker with NPD, and he's going to be presenting the Technology Holiday 2021 Outlook and beyond. So, Stephen, thank you so much for joining us again. I'm going to hand it off to you to get this started.
All right. Thanks, Joe. It's always fun to do these things in person before, online now. And thank you all for taking a little bit of time to dial in and take a look at what we have to say. And certainly thank you to Joe and the team at ECRM for giving me a chance to talk to everybody. So we really do appreciate all of that. Like Joe said, we're going to talk about our holiday outlook, and we'll sprinkle in some of that beyond. NPD's forecasts go right now out to the end of 2023, and they were just completed. So you've got some real fresh outlooks and fresh insight into our best thinking as to what the next 2.5 years are going to look like. So where are we today? Always a good level setting today and in the next couple of months. Last year, if we all remember, Q3 was just a monster. Really strong, more than 25% revenue growth last year in Q3. Unexpected, I think, for almost all of us once we got through that very first pandemic quarter. And certainly while Q3, as we all know, is a back to school period typically, last year it was a buy whatever you can find in the store or online period. And that combination really is going to sink any chance we had for a strong Q3, at least on a year-over-year basis. While we've seen, surprisingly good results that we'll show you in a second for Q1 and Q2 this year, it seems unlikely that we're going to see, a big influx of television sales in Q3. That's just not something that normally happens, and last year was clearly the outlier. Now, while Q3 was so strong last year, Q4, which we all thought would follow up as being pretty good, was actually a bit weaker. Growth was considerably less in Q4 than it was in Q3. And we'll take you through all the structural challenges that we had last year and what that might mean for this year. But I think we're also setting ourselves up as we get through Q3 this year. We're setting ourselves up for a decent holiday. We're all sitting on pins and needles, waiting to see, what kind of demand there's going to be from consumers, what kind of supply there's going to be. Worried about, outbreaks in Asia at the factories, all the shipping challenges. But we probably all have a pretty good idea this year, a better idea, what kind of demand we would expect to see in Q4. And I think the challenge this year is going to be, how do we can we match up supply with the kind of demand that we expect is going to happen? When I show you numbers, when we look at how well we're doing, I feel compelled to remind everybody that last year was probably the best year in the history of consumer electronics. And if you don't positively comp that, it's okay. It really is. This is going to be the second best year, or in some periods, the second best second half. Honestly, 2021 is probably going to end up being the best year on a revenue basis in the history of consumer electronics. So, whatever might happen, we want to make sure we keep that perspective. And, we're confident that there continues to be demand out there, maybe not in the core categories the way there was last year. And certainly there's enough kind of concern given all the price increases and cost challenges that we've had in terms of how that's going to impact demand. But we're confident that even with that difficult environment that we're looking at on a cost basis, the kind of ratcheting down of promotions that we've seen and may very well continue, we're going to have a decent Q4.
I think the challenge, like you mentioned, is will supply keep up with it? I mean, I've been doing buyer interviews across categories for the, throughout the year. And the one thing I keep hearing over and over and over again is supply chain issues.
Well, so here's our philosophy typically about supply chain issues. And it's something we all need to remember. For most categories, yes, we don't have enough inventory. Yes, we don't have enough consistent supply or supply that we can rely on. But the fact of the matter remains that we have seen year-over-year growth for 5 quarters in a row. And we could not continue to be doing that if we did not have enough inventory getting here to satisfy the customer's demand. It may not always be exactly what you want. It may not be at the right price that you would like, but we certainly have found ways to bring products in and to maximize the value proposition of what those products are throughout the pandemic. And I think it's probably a good point to stop and have everyone pat themselves on the back, because we could have all just said we can't get anything and just kind of backed away. But what we've really seen is creative activities and the recognition again that if you want a specific printer or a USB cable or a sound bar, oftentimes there's a pretty close substitute or an exact substitute that we might have available. So yes, it's certainly a challenge in terms of matching that up. I will tell you, and it will come through on this, I am just as concerned that we've seen pricing really skyrocket in the last few quarters. There are categories where selling prices are up 25% from last year. Televisions, the number 1, number 2 holiday category, the last 3 of the last 4 weeks, the average selling price has been above $500. And those are the 3 highest average selling price weeks in at least 6 years.
Wow. So they're making it work one way or another.
Yes, everybody is finding ways to do this. So this is again where we are today. This is from NPD's POS data on a monthly basis. What kind of volume are we tracking? As I mentioned, we've had 2 really strong quarters in a row. Just a blowout Q1, a very good Q2, and now we're staring at 27 billion or so in revenue expectation for Q3, and that's from last year that we're going to have to comp against. Our forecast for Q2 was down 11%. Needless to say, we didn't get very close on that. Overall revenue was actually up almost 10%. Our Q3 2021 forecast is for revenue to be down 3%. I will, of course, remind everyone that given all the price increases, revenue down 3% means units down 7-8% in that area. So we're clearly, and if we measure demand based on units, we're clearly in a period where demand is a little soft. based on all those selling price increases we're seeing. So what does that mean for the future? And, we wanted to get everybody kind of focused on the future. So let's talk about the future here. We have updated our forecast. We actually added about 15% revenue into our 2021 forecast, about 10% into 22, and about 5% into 23. And as I said, and I sort of misstated, 2021 is going to be the best revenue year we've ever had. Like I said, the first 2 quarters were just blowouts this year. And even then, 3% down in Q3 is a relatively low number, comparatively speaking. So we're expecting 2021 to generate about almost 115 billion in revenue, almost 106 in 22, and a little over 101 in 23. It's also worth noting that if we go back to the pre-pandemic periods when we were growing 1 or 2 or maybe 3% in revenue, that if you plug that into the 91 or 92 billion that we generated in 2019, you're going to get relatively close to that 101 billion that we're expecting in 2023. So we've got a few years of elevated volume, elevated revenues, but in a category like technology, where the installed bases are extremely large, where the ownership rates are very high, expecting very long-term double-digit growth is really a challenge. So I mentioned a couple times on just the specifics around our forecast and some of the things that have happened before that. So we tend to want to look at things in 2 ways, both on a year-over-year basis and on a 2-year year-over-year basis. So a couple things you want to note here. Before the pandemic, we were running, as I just said, around 2 to 3% year-over-year revenue growth almost every single quarter. Q2 and Q3 last year were both almost 25% revenue growth. Only about 15% growth in Q4, and then we had this remarkable Q1 with over 30% growth. And in Q2, as I mentioned, we had about 10%. We're forecasting this 3% decline in Q3, but on a 2-year year-over-year basis, that number would be 20% over the equivalent period in 2019. Q4, where we're forecasting about a 2% increase, and we'll dive into that in a couple minutes. That is also a double-digit increase over the 2-year period in 2019. And again, in Q1 2022, we're also expecting that to be a double-digit increase on a 2-year year-over-year basis. When we get out to Q2 22, when we're 2-year comping actual full quarters of pandemic buying, that's when we expect to see even the 2-year year-over-year comps start to decline. And we do expect what we've kind of called maybe a donut hole in that mid-22 to late 23 period, as consumers start to absorb all the things that they bought, as all our installed bases are younger, as some of the challenges, honestly, that the industry's had in terms of innovation and creating new products over the last year, given all the connectivity challenges with our manufacturing partners. We might see some slowdowns when we get into the mid to late 22 and early 23. But by the end of 2023, we expect to start to see the market, get back to flat, and hopefully take off from there.
Do you think that, people, as things open up, well, assuming they continue to open up and that we don't go back in reverse, that's also going to have an impact. People getting outside more. They don't need to be inside doing, gaming and using electronics.
So we're clearly seeing, a little bit of that happening right now, and maybe a little bit in Q4. But day-to-day usage like that is not typically the determinant for electronics purchasing. It is almost always about the install base, the age of the products you have, and the time when it's time to get something new. And let's be truthful, right? Yes, you may be outside, but what are you going to do when you come back inside?
Mm-hmm.
You're going to watch television. You're going to play games on your computer or your console. You're going to look at your phone. You're going to text your friends. You're going to print pictures and create your smart home and all those other kind of things. Historically, the macroeconomic environment has not been a big driver of consumer electronic sales. It really is all about install base, ownership, and that innovation piece that really does say to people, yeah, I really want that. So all those things are happening. I'm not concerned that those take away from people's purchasing of consumer electronics. But a great question. It's something we've debated here at NPD for a little while. We have categories that are very tied to usage, and when people go out, they maybe aren't spending money on some of those kind of things. And certainly if you saw some of the earnings this week around streaming, and if you're not right in front of the TV, you may not be streaming at the same way you were before. That doesn't really mean, though, that you don't want a 75-inch television, because we all want 75-inch television. Tech has always been a top-heavy business, and it continues to be in our forecasts. We still forecast about a 1% revenue share increase for headphones, notebooks, smartwatches, tablets, and TVs. Those are kind of the big five in terms of revenue in the consumer electronics space. And as those categories continue to grow, either through average selling price increases, mix increases, usability and usage increases, we feel confident that the top of the market is still going to be there to help us manage and deliver both sales volume and sales traffic that end up delivering growth.
I'm still a holdout on the smartwatch. I got my $21 Casio because I have a habit of breaking my watches. So I gave up.
I'm a negative watch kind of guy right now. Maybe someday, but when my last watch died, I just never replaced it. I always have the time on my phone. It's right in front of me.
Yeah, so, I had one guy.
No, I was going to say, although it's funny, you still do this sometimes.
Yep.
Muscle memory is a funny thing.
But not everybody. I was in an elevator in a building in Manhattan once, and a guy walked in. He actually was wearing 2 watches. So I was like, do you know what time it is? He pulled out his phone.
Okay.
so go fair, but he was young. So the younger people are used to doing this.
Yes. But again, I want to remind us that even if you don't play in these categories, and even if they're not huge opportunities, they drive a whole range of other sales. They create top of mind, they build traffic and interest into the overall consumer electronics landscape. So let's talk about holiday. I got a bunch of words on here. Right now, our forecast, as you'll see in a second, is for $5 billion in additional revenue this holiday season over 2019, and $1 billion in additional revenue over 2020. Consumers clearly have the income, the disposable income, to support a strong holiday season. But as Joe and I were just kind of talking about, what is really going to drive this holiday, in my view, is pricing, or maybe cost might be a better way to think about that. Mix. One of the big shifts we've seen in the last 18 months has been consumers buying up and spending more on products versus what they might have spent earlier. Some of that related to inventory, but some of it related to demand. And then selling prices. We remain a little concerned. Looking historically, high selling prices have been one of the things that dampen volumes and dampen demand. But we do believe if these mixed trends hold up, if the volumes hold up or improve, if we can see some improvement in the levels of promotion, which have been very, very low so far this year, and if pricing holds or prices don't go up much more, there is upside revenue potential, we think, in Q4. What does the specifics? How do we go to market this year? We expect to see a much more traditional selling season focused on what I guess is now traditional selling periods. Black Friday weekend, really. That Wednesday before Thanksgiving through the Tuesday after Cyber Monday, those 2 weeks pre-pandemic had continued to gain share over time. As you'll see, we clearly saw a bit of a shift last year, but we do think that given what we know today, that stores should be open, people should be shopping, that we will, and even with the closings on Thanksgiving, we will see a much more traditional selling environment this year. We remain concerned about promotional activity. The one thing that drives people into those traditional selling periods and gets them interested in electronics during the holiday has always been promotion. Great prices, great products. Last year, we were able to get some good pricing, but they happened at odd times earlier in November. And we were able to manage through that. Certainly the last 6 or 7 months, costs have gone up dramatically. We've seen promotions fall even further from the levels they were in Q4 last year. And especially, this is especially true in the big dollar segments around computing and televisions that have been traditionally the traffic drivers during the holiday. When the selling price on televisions is up 25% from last year, how do you find products that can be priced right? And if what people are buying are $1,500, $1,800 products, $1,200 products, yes, that delivers a lot of revenue, but it's not going to deliver the kind of traffic you want because there are only so many people who will buy $1,000 televisions or $900 computers. So we remain concerned about the level of promotion, the level of absolute pricing, and what that's going to mean for sales this holiday season.
You know, speaking of promotions, and this is a look back, but it was interesting, you know, during Amazon's Prime Day, which was, I think it was 2 days, but you also, it was matched by Target had an event, Walmart had an online event. How has that impacted the category? Were there a lot of consumer tech sales during that?
Prime Day for tech was a bit of a disappointment, I think. We didn't see the same kind of bounce that we have seen in previous years. While June is a good period for some categories, I don't think it's the ideal period for technology. Again, back to school is mostly focused on compute, and we all know the challenges that were around in computing last month or 2 months ago now. That kind of held some of those pieces back. It's a little early for people to be pantry loading for Christmas. It's just it's a tougher period, I think, for consumer electronics. And I think, when everybody has a promotion, sometimes that serves maybe to dampen consumers' enthusiasm overall for promotions.
Yep, and everybody was getting in on the game, it seems, during that time.
Yep. So I said we have income, we have money to spend. These are just a few of the data points. Housing prices are up dramatically. Credit card debt is down. Saving rates are up. Unemployment is down. We're seeing, the government stimulus money continuing to come out. The child tax credits being paid earlier rather than later. There is a wealth effect. And given the kind of products that we've been trying to sell in the last year, 75-inch televisions, gaming PCs, high-end phones and tablets. These numbers, this kind of income bounding that is a good sign that at least that part of the equation, not something we have to worry about.
So this is so it looks like consumers will be a little less worried about price increases since they have this extra money.
We think that's likely, yes. We also think that they want to buy better as well. So the money both supports them in terms of, I know it's a little bit more, but I can afford it. And it's a little bit more, but I'd really rather have this than trading down to something lower cost. So what do we expect holiday to look like? So this is a nice, 9 years of holiday sales results from NPD. This is for our POS categories, some caveats down the bottom there. Can see that in the mid 2010s, we definitely had, challenges around demand. We saw products declining, not too much innovation. But this year we expect will be the 4th consecutive year of year-over-year revenue increases. And while it'll be right now, at least the forecast is it'll be the smallest, it will still be the largest holiday season that we have seen to date. We're forecasting almost $36 billion in revenue this holiday season. So something dramatically better than what we've been used to in the past. And like I said before, that's $5 billion above the 2019 numbers. We just talked about, selling and selling periods. And again, when we go back and look at the last 8 years, we see some real consistency, but we do see a couple things that kind of stick out, right? From a consistency basis, until last year, the 1 week that really was gaining share was Cyber Week. That had gone from 10% of sales in 2013 to 13% of sales in 2019. The other thing that we have seen pretty consistently before this was consumers really were not, you couldn't entice them to buy early. People were used to waiting till Thanksgiving week, and they did that. So the last piece is, even as we opened in Thanksgiving, what that basically did, we believe, was held on to volume for Thanksgiving week. Certainly, we know most of the in-store volume pre-pandemic on Thanksgiving night came out of Black Friday. It was really just a shift away. And then we have 2020, where all the rules were broken pretty much. We saw a 5-point decline in Thanksgiving week, a 2-point decline in Cyber week. All the fear mongering and screaming about you have to buy early, because if you remember Q4, it wasn't about inventory. It wasn't necessarily about availability. It was about shipping. It was about transport. It was about the ability not to get stuff from China, but to get stuff from the warehouse to your house. And the result of that was a 3-point increase in those first 3 weeks of November, which is traditionally when we see that kind of, that when we saw that happening, and have been the weeks where everyone has tried to move consumers purchasing up out of Thanksgiving and Cyber Week. And then, of course, I think as Joe talked about a little bit, we had that big increase in October with Prime Day happening in October last year. Had an outsized impact because October is usually the worst month of the year in terms of volume. So even a little bit of a push had a big impact. Right now, there's no indications that will happen again. Obviously, I don't have any inside information to tell you otherwise, but assuming that there is not, we would expect the numbers to go back and look very similar to 2019. In fact, I would probably argue we will probably see more share again into Thanksgiving and Cyber Week. And those numbers will likely come out of the pre-Thanksgiving November period. Have to go back and check. The last 4 weeks are oftentimes also determined by the calendar, like when does Christmas fall. So if it's a little later in the week, that tends to pull more data, more sales into the right weeks of the holiday versus some of those sales may be bleeding over into the beginning of January.
You're right. I think I did notice that in the last holiday season, the retailers and the e-com guys did a better job of letting people know that they should order ahead, and they would give them warnings. You got to order by this time if you want to get it by this time, and so I think that they did a much better job at that.
Yeah, and I think this year you'll probably see exactly the opposite, which is for the most part, anything I order online, I'm pretty much always getting that the next day or in 2 days. Haven't really had any challenges with that. We have a much better, more established buy online, pick up in store environment this year than we had last year. It's certainly a little bit more spread out. It's less likely to be as focused on consumables.
Mhm.
Some of the bigger retailers maybe spend a little more time focusing on groceries than discretionary products. So this year, we probably won't have the same level of demand for grocery and on a buy online, pick up in store basis. And that ought to free up some labor and opportunity to make sure that BOPUS experience in retail is primo as well as the shipping experience.
Yeah, and that'll definitely help because I think buy online, pick up in a store for CPG items was up 200% last year. So you're right. As that goes down, it'll free up more space, more capabilities.
And mind share too, I think,
Mhm.
for the consumer.
Yeah.
So it's always fun to look at when people are going to buy. I wish I could tell you it was fun to look at what people are going to buy, which it is because it's my job every day. But from a holiday perspective, it's the same old, same old. Televisions, which always are the #1 revenue category during the holiday season. Right now, our forecast is for televisions to be about 20% of the revenue, which is on the high side of the long-term numbers. But again, like I said, remember, TV selling prices are up 25% on almost every size below 65. And we've seen an enormous increase in share in both over $1,000 televisions and in 75-inch and above TVs. We do expect to see a little bit of a pickup on the notebook side again this year. Windows 11 can't hurt. We'll probably have some better availability on the MacBook side with maybe a full suite of M1 MacBooks. And, we're hopeful we'll see some higher average selling prices and maybe a little bit of a volume recovery for Chromebooks. On the tablet side, it's always a balancing act, the high dollar value products from Apple versus some of the, entry-level iPads and all the entry-level Androids. This year, it looks like that's going to be skewed towards the higher priced products, which tend to generate, again, a little bit less volume. The other big driver behind that notebook number is also behind the desktop number. It's not just Windows 11, it's not just some of the Mac pieces, but it's clearly gaming. Gaming has been the sales driver in PCs through the first almost 7 months of 2021. It's been the sales driver in monitors, in mice, in keyboards, in headsets, in every single PC gaming related category that we track. It has been, a huge driver. Certainly, we know the console issues and consoles aren't tracked in this data, and whatever consoles come in are going to get sold, right? So we really don't have a lot of control over that piece. But in terms of PC gaming, we continue to believe we're going to see another enormous holiday season for PC gaming, even with some of the shortages and challenges in that segment as well.
And it's just amazing what a culture has been built around the gaming. It's just with Twitch and all of that. And it's funny, whenever I have meetings, you could always tell who the gamers are because they have that big chair behind them with the speakers built into it. And
yeah, there's a cult. The good thing, though, for everyone is, while gamers tend to be a little brand specific, they're not quite as channel specific, right? They'll buy what they want, where they want, when they want to buy it. probably maybe a little bit less promotionally oriented. When I need a new mouse, I'm buying a new mouse, right? Or a new headset if I want to get those things. And like I said, while we've got some, certainly we all know the challenges on the graphics card side in the DIY market. We haven't seen quite the same challenge in availability in the pre-configured PC side. And in fact, we probably see people buying pre-configured gaming PCs because they can't get graphics cards to build their own computers. Now, that may change. We certainly heard some rumblings about what may or may not be available, but we'll see what happens. So all those pieces, and then the final piece is headphones, and as much a phenomenon, the AirPods. For some reason, I can never call them the right thing. The AirPods have been the last couple of years. I think we can all kind of see that segment is starting to morph a little bit. We're seeing a lot more lower cost alternatives. We're seeing Apple be more price aggressive. And while there's some rumors that there'll be a redesign on the AirPods, and we'll see what happens with that. While headphones, again, over this 9-year period, have tripled their share of revenue. So let's not lose sight of the fact that, long ago, headphones were not a top category. They are now a top category, permanently cemented in that place. So let's finish up with just a couple of thoughts on the big scales and in the small scales about what may or may not do well this holiday season. Some of these might be a little bit repetitive, but these are some of the big categories that we feel pretty good about. All the 2021 numbers you see here are our forecasts for Q4 and the actual numbers for 2019 and 2020. We've talked a whole bunch about PCs. We don't probably have to go over that, but we clearly expect a big increase this year. Talked a lot about TVs. The really strongest part of the market today is 75-inch, is OLED, is $1,000 and above TVs. We're expecting a huge increase in the volumes there. And the interesting thing on premium televisions is it drags a lot of accessories along with it, mounts and sound bars, and those kind of products. But also, given that we have not seen the same kind of price increases on the biggest televisions as we've seen on smaller ones, it actually makes those bigger televisions look more affordable. A 65-inch OLED or QLED is still $1,500 to $2,000, but a 55-inch LCD that was $599 2 years ago is $799 now. So while it's not an exact match, there's clearly some shifting going on there. We talked about gaming. The untold story of gaming as well is that there's a lot of crossover with work from home, right? High quality components, high quality peripherals. Certainly the extreme increases we've seen in monitors are not just about gaming, even though gaming monitors have grown dramatically. It's also about gaming monitors being used for productivity and for work at home. Had to throw VR in there. It's the poster child for tough comps. Oculus 2 launched, I think, in October last year. Sales were up over 2x from 2019. Kind of hard to, outpace that, but the 2020 revenue forecast for over $400 million in VR sales, again, is 2x what those numbers were in 2019. And mobility could have clearly easily been a decliner, but what we have seen is this increase in revenue in 2021 in the wireless and in the case kind of environments. We've seen those numbers increase over the last year. MagSafe, USB-C are really the growth internal segments in there that are offsetting some of the declines. And as we travel and we get out a little bit more, we'll see more demand for accessories. And in smart home, while the pandemic may have dampened some of the demand, we expect products like doorbells and lighting as people maybe focus a little bit more on that kind of technology to have a really solid holiday season. On the other side, I didn't want to ignore the smaller categories, right? Those are all multiple billion dollar segments. Let's look at the $250 million segments. Seems like a lot, but right, 20 million a week. So some of them are relatively small. So we've got 6 here that we think have a strong outlook. Digital picture frames, we want to be more connected. We want to be able to share things, across areas. We're kind of used to being able to connect on Zoom. I think we're seeing some of that flush over into the picture frame category, which we're forecasting to be over $80 million. Web cameras will be strong once again. Again, probably not a lot of growth over whatever comes in goes out again, but web cameras were a dying category before the pandemic, at least for consumers, and they've been revitalized. Microphones, we're here talking to you. We may have microphones with our headsets. People doing streaming, doing Twitch, doing podcasts. Again, maybe a little bit decline from last year, but 2x where we were in 2019. Drones up 40% from 2019, maybe down again from where they were last year, but we're certainly seeing a little bit more interest in that kind of enjoyment category. Routers, especially mesh, again, category that just exploded last year, but we've got some great new technology in that segment now with Wi-Fi 6 and 6E, and those products are going to help convince people to continue to upgrade during this meeting, but I'm kind of thinking about it's time because Zoom gets a little bit flaky on me after a full year of using that. And then finally, projectors, kind of the sister category to televisions. Certainly, we've seen a lot of projectors as people kind of moved outside in the summer of 2020 and summer of 21. And that's a comment for all us East Coast and Northern people, all you people in Florida and the South and California. We've seen that part of the market improve. So I want to thank Joe again for this, and I'm going to turn it back over to him.
All right. Well, thank you again, as usual. Informative, entertaining. I always enjoy talking to you. So thank you again, Stephen. And I want to thank everybody for joining us.